Hey y'all, Zingy Trades here. Market's been choppy lately. As you can see on this ES chart, we're kind of just been stuck the past two sessions. So rather than just sitting here and staring at this, let's do something a little productive and put out an educational video. Today I want to talk about OTE, or optimal trade entry, and why it's one of my favorite additions to my trading. OTE is an ICT concept. I'm not an ICT trader. I just take certain concepts from ICT and I apply them to what I already do. OTE refers to a specific retracement zone on a Fibonacci, typically between the 0.618 and the 0.786 levels of an impulse leg. The idea is that institutions are re-entering or buying positions within this area. Now, honestly, OTE alone means next to nothing, right? You need to have context. If you're just drawing fibs from every single swing and buying at the 0.618, right, you're going to get chopped up. The trade's not going to work. So the level by itself has no edge. OTE I use as a location tool. It tells you where price might react. The first example I want to look at today is PSA, public storage, and this is in relation to XLRE, and that was an added Confluence to this trade as well. We'll touch on that in a different video as how I use sectors to find tickers that I like, etc. Right? The first thing that I'm looking for before I ever even think about OTE is the overall structure, right? So we have a high into a low, to a lower high, lower low, right? And then all of a sudden, market structure shifts to the upside, and now we have this new high, and we have the market structure shift, right? So this is telling me that the trend may be changing, right? We may have what was previously a bearish structure now be flipping into a bullish structure and have bullish intent, or vice versa, right? If I invert this chart, you'll see, okay, this is the opposite now. And the same thing can work with a break of structure. That break of structure is just telling me that the trend is continuing with conviction. Either way, the structure in and of itself is giving me confluence to take the trade. Okay, so let's dive into this first example here. So as you can see, PSA, I deleted all the fibs that I previously had. PSA had a market structure shift to the upside. So what am I going to do? Right, I'm going to take my fibs from this recent low to this high. You see I've got OTE here, and I'm just going to extend it out. And I'll share my settings in the comments if y'all want it. Right, and we have OTE, right? And you can see, based upon what I've said, somewhere between the 0.618 and the 0.786 level is where that real confluence, that real area that I'm interested in comes into play. You don't always get the 0.618 or the 0.786, but within this area, and that's why I have the 0.5 drawn as well, within this area is where I'm starting to look for price to react, right? And you can see that I've already drawn some previously important things. I have drawn a daily order block, and if I take this down to the 4-hour time frame, you'll also see that we have an inverse fair value gap. So with that in mind, what am I doing? I'm slowly taking entries into this position, right? So on January 30th, you can see I took a position here, right? And then I added when we were down here. So let's go ahead and see, how did price react around OTE? You gapped up, good sign for buyers, filled some of that downside gap. You have now taken that previous impulse leg high. Okay, so we've seen now how price has reacted out of the OTE. Made a higher high, made a higher low, made a higher high. So let's talk about exits. I work in trims. Nothing I do is an all or nothing exit. Right? This isn't a clean 1 to 2, 1 to 3, 1 to 4 RR trade. I work in trims, and this is really important. When a position is up somewhere between 20 and 40%, which would have been somewhere around this candle, if I entered right here, 20 to 40% I'm getting on this candle. I'm taking a lot of my positioning off there. I'm just trimming it. All right, that way I've locked in real profit. At this point, the trade's proven itself, and I'm not going to let a winner turn red just because of the fact that I'm greedy. Okay, what's the next trim? Great question. Next trim that I'm taking is going to be at this previous impulse leg high, right? So right here, whoops. So right here, when we broke it, I'm taking more trims off here. So anything left from this point, right? This is runners. This is free. I'm going to let it do what it wants to do. But there's a reason, and I'll show you in some of the other examples, as to why I trim so heavily at 20 to 40%. Another way that I look for targets as well is called fib extensions. Fib extensions, so off of OTE, what you'd be looking for is the negative 0.27 and the negative 0.62, right? This is where I'm going to take more of my positioning off, right? Or be my real true final targets if I don't plan to hold this into expiration. And the psychology of this and the reason I trim is important, right? Trimming early gives you the ability to remove a lot of that emotional pressure when you're in that trade. You're not going to white knuckle full positions through every pullback. You've banked your profit and you're letting your runners run. So I mentioned earlier that I would talk about why I was not necessarily fearful of this break of structure to the downside. And the reason I was not is because you can see we broke structure to the downside, but we never displaced further down. We exhausted sellers here and then we pushed price back up. Bullish signal. And then within OTE, we found confluences that we liked to trade it back to the upside higher. Okay, example number 2. And let's talk about this one fast. And again, if anybody needs proof, here I am in the trade, right? February 17th. So if you look on the chart right here, this candle is where I bought. And I believe I bought more down here as well. I didn't take a screenshot of that. Here's my exit, right? March 5th. So just if anybody wants to see, I'm really in these trades. I actually do this. So let's talk about it. Break a structure. Then we're looking for drawing our fibs. And you can see all of a sudden we're in OTE. What additional confluence do I have, right? We've had to break a structure to the upside. We had displacement. Then I'm looking for something within OTE. What did we have? We have a daily imbalance in this fair value gap right here. Okay. So I entered a little early because I take starters in positions and then I buy more when we get to my last area of confluence, right? This is essentially like putting your back against the wall to say, hey, I think price is going to react here, okay? So let's play it out. You can see I have my fib extensions drawn on this one, but this one is going to be a key example as to why I take trims. If I average down by this point on this gap up, I'm taking a large portion of my profits because we're getting real close to this previous impulse leg high as well. And essentially, if you play this out further, it just ends up dwindling to the downside, right? But this is telling you why taking trims is so important. You see how price reacted out of OTE, right? So when we got to this point, especially on this gap up, I'm taking a majority of my profits, right? We're real close to this last impulse leg high. By this point, even on my original position that I entered here, I'm up, right? So I'm taking a majority of my trims here. And if the position wants to continue running, I have upside targets based on my fib extensions. So another example is AMPX, and I can't prove I was in this one because I wasn't. I missed this. No, I'm sorry, I didn't miss this. I didn't play this one because of earnings. If earnings is in a week or two, I typically skip, but it can still work, and I want to show you. So we have a high into a lower low, into a lower high, lower low, lower high, lower low, lower high, lower low, that all of a sudden makes a higher high. So based on the market structure shift, we can look now for OTE. From the low of this impulse to the high of this impulse, and we'll extend it out. Let's go ahead and watch this play out. Okay, so what did price do? Price reacted around OTE. You'd be looking over to this left side here to see what was your confluence to potentially get into this trade, right? So by this point, you're up 20, 40, somewhere percent. Depends on what contracts you're taking, right? You're trimming more off here. You got the 0.27 extension, then you got the 0.62 extension. You can see market structure shift or break a structure, retest somewhere in the OTE zone, right? Take your trims, break a structure, fib extensions or standard deviations or whatever you want to use for upside targets. Okay, this is just one of the ways I identify upside targets. Let's take a look at another example. DOW, not the Dow Jones, the actual ticker DOW, Dow Inc. Okay, this is another trade that I was in, and just to prove it, once again, I bought some March 3rd, and I bought some on March 2nd. What did I see that I like? We had to break a structure, so let's go ahead and put the fibs on, from low to high, and then you can see where did price react, right at that 0.618. But again, like I mentioned, OTE in itself is not enough confluence. So what else did we have that I was like, okay, I'm interested in this trade. First thing we had is I had retested this previous break of structure. The other thing we had is we had another daily imbalance, and we never hit this daily imbalance, and this is why I take starter positions as we approach OTE, is because I want to be able to capture the move even if we don't get my final area to add to my position. Right there, that's 20%. Look at the gap up. So I would have trimmed on the gap up, and then I would have taken another trim when we got to that impulse leg high. And by this point, my trade is free. The rest of this can go to zero, doesn't bother me. And you can see we hit that 0.27 fib extension. Last example for this session is HUN. Again, similar story here. Break a structure from this low to this high, you're going to be drawing out OTE. I already have it drawn here, and I already have a daily imbalance that I'm interested in on HUN. So we're going to see how does price react out of here. Okay, so as you can see, we've gapped up, and we gapped up again. I'm taking a majority of my profits here, so that way I have less stress and less skin in the game on this trade, and you'll see why. So what did price do? You can see we got the gap up, right? And that's why I'm taking a majority of my profits here. By this point, I'm 20 to 40% on my contracts, okay? I'm not waiting for this high because we're not always going to hit this high. We may not. Right, and I want to guarantee and lock in some profits, which I do so here, and then you can see how price reacts. We displace to the downside, and then we gap down, right, and we're back in that daily imbalance. To wrap this up and put it all together, structure first, MSS or BOS, Confluence, fair value gaps, IFVGs, breakers, order blocks, gaps, and use OTE for entry location. Match your expiration to your time frame. Pick a strike at your first target, trim 20 to 40% early, trim again at the prior impulse high, and then let runners do more work for you. If this was helpful, drop a follow. Zingy Trades, I'll catch y'all on the next one.